It's hard to believe that there could be bigger news than the election of a new president of the United States, but this could be it. Pfizer announced its phase 3 COVID-19 vaccine trial provides the initial evidence of its vaccine's ability to prevent COVID-19. With more on vaccines and a new president is Michael Craig, head of asset allocation at TD Asset Management. Mike, markets are soaring on the news that Pfizer's vaccine is more than 90% effective against COVID-19. Do you see this as a one-day pop, or could this sustain a longer leg of the rally?
Well, it's a very good outcome. Obviously areas of the markets that are rallying tend to be more cyclical, or areas that have been really hurt by COVID-19. I think when you go into the details with it, it's very positive. The effectiveness is very high, but this is going to be a very challenging logistical exercise. The vaccine needs to be stored at -70. It's a 2-shot vaccine, so you need 1 shot plus 1 21 days later. And this you need to roll out to much of the world. So I don't expect, we're not going to be at a lockdown next week, but I think it's kind of the beginning of the end, I think, for COVID-19. Although that end will be well into 2021 or even later.
And do you think that this development could change the way that governments deal with the current pandemic situation? I mean, for example, fewer lockdowns?
I don't think if you're in a region that's having a huge spike right now, I don't think this changes anything, because it will be some time before you have the vaccines anyway. And so I think this, current course won't deviate when those vaccines start rolling out and the effectiveness is seen. Then I think you start to see some rollbacks. But my sense is that as of the short term, this doesn't change much as far as government policy on lockdowns.
Okay, now I want to just pivot to the other big news. Of course, it came 4 days after the election day, but Joe Biden will be the occupant of the White House come January. Is this another positive development for the markets, or did the markets already sort of price this in beforehand?
No, I don't believe the markets have priced this in beforehand, as evidenced by the reaction after the election. Another case where markets hate uncertainty. The uncertainty was there's a range of outcomes, one of which being a contested election, which you could argue it's somewhat right now, although I don't think there's a lot of momentum for the Trump campaign to contest. And he's going to make lots of noise, but you're not really seeing the full force of the Republican Party get behind that. So that uncertainty is now lifted. We had done some work on this, that markets generally do rally after election results, regardless of who wins, because of that lack of uncertainty, or that uncertainty disappearing. Has felt like we've gone a long way since November 3rd, so we'd be a little bit more cautious here after this recent rally. But certainly it sets up well for a continued positive momentum into the end of the year.
And some people are saying that Joe Biden, will be the most progressive U.S. president in history, and he wants to roll back things like the Trump corporate tax cuts, raise taxes on high-income households. Do you expect that he'll be able to carry this progressive agenda if the U.S. ends up with a divided House? And what could that mean for the markets?
I don't believe he's going to be able to push forth a radically progressive agenda, and I don't think it was ever his intention in the first place. First of all, the Democrats won the executive. They've lost seats in the House, and they haven't taken the Senate so far. There is a special runoff in Georgia, so it's conceivable that the Democrats could get to 50 plus 1 with the vice president. But it's a long shot, and it certainly doesn't have a mandate to radically change U.S. tax code or spending. I actually think in many ways that the reason the Democrats didn't do as well as they could have is there was a real pushback to fears of a more progressive or socialist agenda. And so I think Biden's, 2022 is not that far away, and that's the next midterm election. I think he will be running on more of a centralist approach, repair relations internationally, rejoin the Paris the Paris Climate Change Accord, etc., and look to find common ground with the Republicans in Congress for policy that's required. So, and net, I think actually this is very good for U.S. democracy, as extremes in both the parties have been shot back.
And I think one thing that's on markets' minds is the stimulus deal. What's the likelihood of us getting a stimulus package passed this year, or even in 2021?
Well, it's a bit murky at the moment. This is not going to be a tremendously smooth transition as you see the behavior of the president after the election. And so there is some desire to get some type of fiscal deal done. I think it'll be much smaller than what was initially targeted for back in October. U.S. employment data last Friday was actually quite supportive. So people are getting back to work. The workforce is healing. And I think you might get a smaller deal done, but it's not nearly as certain short term. I think once we get through January, we'll have a bit more certainty on that.
And you mentioned, that this might not be a smooth transition, and certainly Donald Trump has yet to concede. Are these uncertainties worrisome for the markets?
The market is completely ignoring it right now, rightly or wrongly. But I don't think there is much momentum. You're not seeing the broader Republican Party get behind this. I think they're looking at longer term and not the short term. And my sense is that there's a bit of a litigation strategy where they're throwing everything they can to try and get something to stick, and so far nothing has. And my sense is it'll be a bit noisy, but the markets are completely ignoring it.
What will you be watching for after Biden takes office?
Well, it'll be interesting to see what he gets done on infrastructure. I think this is an area where you do have some agreement across the party aisle. And so I'll be curious to see what plans are there. Some of the more progressive things like healthcare for all, that's not going to happen. And tax cuts, tax hikes also is much less probability right now. So I think infrastructure is the one area where I think parties can get behind each other, and certainly early investment cycle, high unemployment rate, very low bond yields. If there's ever a time to do it, it's now. So my sense is that might be on the table early in 2021.
Michael, thank you very much for your time.
My pleasure, Tony.